Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
There's a story out there, and the headline doesn't help me because I really don't know what's going on here. Microsoft and Apple drop OpenAI board plans as scrutiny grows. I thought we wanted the big tech names to be supporting AI, and I don't know what's going on here.
So it was like a freebie seat, wasn't it? Like,
yeah.
They're just watching.
Yeah, exactly. But they tell me it's important.
Okay.
And Dina Bass, who's a really good technology, she's been a great technology reporter for, I'm going to say 30 plus years. I was reading her stuff way before she came to Bloomberg. All right, so I'm going to self-admit I don't know what's going on here. So I said, please get Mandeep Singh, because I'm just guessing he knows what's going on. Mandeep Singh, he's a tech analyst at Bloomberg Intelligence. Microsoft and Apple dropped plans to take board roles at OpenAI in a surprise decision that underscores growing regulatory scrutiny of big tech's influence over artificial intelligence. What's going on here?
Well, so, if you roll back to last year when we had the OpenAI drama, the board firing Sam Altman and then OpenAI adding 4 new members. And I think everyone so far has been just sort of interested in how OpenAI has evolved since then, in the sense that they have, even though they have added independent board members, Microsoft, and now Apple probably would have joined the board. It doesn't make sense. Like, when you have vested interests, in the case of Microsoft, they have a 49% stake in OpenAI. And they're the primary cloud provider for OpenAI. How can you do a good job of being an independent board member? And that's where, the regulatory scrutiny comes into play, because the regulators obviously are concerned about how Microsoft bought Inflection AI. Even though it wasn't an acquisition, they got all the employees of Inflection AI. So that's what it comes down to, the optics of it here.
Break down for me again what the relationship is now with OpenAI and Apple versus OpenAI and Microsoft.
So Microsoft has a 49% stake in OpenAI. They made a $10 billion investment. And so you could argue, if you're an investor in a company, you should get a board seat, as is Sequoia and some other private investors that OpenAI has. Apple, on the other hand, just partnered with OpenAI, which is going to be one of the providers of Gen AI model on their iOS and other devices. And so it's more of a customer-supplier relationship, if you want to call it that way, that Apple is using OpenAI as a supplier. Why were they getting a board seat? Well, you could argue they could be an independent board member, like Fidji Simo is one of the board members for OpenAI. She's the CEO of Instacart. Now, I think that's where the fact that these technologies are so intertwined in terms of AI being deployed on Apple devices, you could argue that the independence of the board comes into question. And given how important AI ethics and guardrails and all the things that regulators care about, that everyone cares about, frankly, I think the independence of the board was questionable, and these companies decided to proactively not join the board, which I think is good for optics.
So Microsoft is under scrutiny in Europe and by U.S. regulators into, I guess, their alleged dominance of AI. What's the view on the street about that risk to Microsoft and, I don't know, I guess at some point maybe Apple, I don't know, but certainly Microsoft?
I mean, the best way to look at it is these companies require a lot of compute for training their models, whether it's OpenAI, Anthropic, any of the independent Gen AI model providers, they need a lot of compute. Now, in the case of Microsoft, the arrangement is really, full of their interest, because OpenAI ends up using Microsoft compute for training their models.
All right, what does that mean? What is compute?
So think of all the NVIDIA GPUs that OpenAI needs, but it's deployed on Microsoft Cloud. So if I need compute to train the models, I'm not setting up my data center. Anthropic, OpenAI, they're not setting up data centers. they're using Microsoft data centers to get access to that compute. And that's where they could have gone to Amazon or Google to get that compute. The reason they're going to Microsoft is because of the, the stake they have and the board seat. And so if you are OpenAI and Microsoft is sitting in that board, are you really going to pick any of the alternative cloud providers for training your models?
No.
Probably not.
Do you feel like OpenAI will ever go public or be bought by Microsoft? Like, how does that situation play out?
I mean, everyone knows there are antitrust concerns around big tech buying any of these companies. So the acquisition is definitely out of the window. And that's why the way Microsoft got all the employees of Inflection AI, it was a pseudo acquisition.
Yeah,
you get all of the employees, you pay $600 million, and you're not calling it an acquisition. So in the case of OpenAI, obviously that's not going to happen, but Microsoft does have a 49% stake. Google bought DeepMind for $600 million. Now, they bought it, a few years back, but it just goes to show how, these companies position themselves for the future, and they end up buying a lot of the startups. So I don't see an acquisition on the cards, but OpenAI is unique in the sense it's a nonprofit. And then they are looking to build a business out of it. So their structure was sort of very weird to begin with. And now they had that board trouble where it was a 3% board that fired their CEO. Now they're expanding with independent board members. So I don't think they've got it right still, but at least, not having Microsoft and Apple on the board is good in terms of optics. And that's what I can conclude here.
On surveillance earlier today, we had a London-based hedge fund, which I'd never heard of, Ruffer. They got about $38 billion in assets under management. They have a bearish call on the market. They think it's overheated, everything's overheated, blah, blah, blah. And that includes AI. Now they're saying they believe AI. Now, of course, they've been wrong by their own admission, and they've been trailing their peers because the markets have been going up. But the AI call was simply that, AI is transformative, blah, 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 blah. But we don't even know what the uses are. And we don't know all the money that's being invested in AI. Explain to me what the return on investment is on that. How do you answer that or deal with that?
I mean, we know some tangible use cases right now. One is from a developer co-pilot perspective, AI works. And this thing is getting deployed at every company. Developers are using co-pilot. Same thing with customer service chatbots. This thing is productivity enhancing. And this is getting deployed. So I think it's hard to argue that there is no tangible use case. But look, the valuations have run up, and there will be a disconnect at some point where valuations are way ahead of reality. And that's where, as an investor, you got to pick your spots. I mean, a TSMC will continue to benefit, whether it's NVIDIA, whether it's Apple, or anyone else that needs the latest chips for AI, they will continue to benefit.
And I think I can kind of write the press release from NVIDIA or any company that's really been lifted by AI. It's kind of a customer fatigue. They've already bought all this stuff. They've already invested all this money. Our customers have pulled 3 to 4 years of CapEx forward and spent it over the last 24 months. And we're seeing, instead of going 48%, we're going to go with 30%. That's a bad day.
Yeah,
for tech and for the market, I think. That's just my opinion.
It's not going to be uniform. So some sectors will see very tangible productivity benefit of AI. Some others will have a delayed benefit or maybe no benefit. And that's where the disconnect will start to show up. But right now we are in that mode where everyone believes AI is the next big thing and it will have productivity boost.
And then just one quick point on what Paul was talking about too, just that the monetization part, like you say the use cases are there, but then how you monetize it, like we don't know what that really looks like yet. Like everyone's going to keep wanting NVIDIA chips, okay, I get that, but then what the use case is for that, okay, then you got to monetize it, and at some point that's going to have to be proven.
I mean, look at cloud. So when cloud came to the scene, everyone said, okay, it's a secular trend. But the monetization came about over time. And there are certain cloud native apps that really did very well as a business. So that's where an AI native app, I think it's going to do exceedingly well. Whereas if you're changing a business and you're overlaying AI, you may or may not be successful. But we'll find out.
Good time to be a tech analyst.
He's the best.
Yeah, I know.
Like you can ask the dumbest questions and he's like right there for you.
Yeah.
Which I appreciate.
I know. It's amazing. Mandeep, thank you so much for joining us. Mandeep Singh, Senior Tech Industry Analyst for Bloomberg Intelligence. coming into the New York office, unlike his management team. So we appreciate that. Thank you, Mandeep.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Fed Chair Jay Powell, he is speaking to the House Financial Services Committee in his opening statement. We will bring you the Q&A when that kicks off. Steve Matthews is Bloomberg Federal Reserve Reporter. He joins us now. Hey, Steve, anything we're going to hear different today than yesterday?
I think the plan is not to hear anything different. I mean, Powell's plan yesterday was pretty clearly to try not to make news. I mean, he was asked repeatedly about, are we going to get a rate cut in September or July or whenever, and he said, I'm not going to give any guidance on rates. And I think he was trying to be very balanced. In most of the recent testimony, the semi-annual Humphrey Hawkins testimony, he has tried not to make a lot of news because, and this is a particular political situation. It's right before the election. He doesn't want to make a lot of news, so I think that you're going to see the same tone today.
Alix, one of the things I love about Bloomberg and Bloomberg News is we actually have a dedicated reporter for the Federal Reserve. How cool is that? Nobody else does that.
No, it's really cool.
Yeah,
it's
Steve.
The best.
You're the best. Steve, thanks so much. I want to ask about, you just mentioned the election. Help us understand how the Fed thinks about timing of any rate movement and the election. When is too close?
Are you stealing John Tucker's question?
I am.
He's totally stealing John Tucker's question. Sorry, go ahead, Steve.
There is a theory out there among Fed watchers that the Fed would prefer not to move in September. It's the last meeting before the election. If they move in September, there will be complaints, oh, you're doing it for political reasons. What Powell has said about this is they don't think about it at all. If September is the right time, they will move in September. And, it doesn't enter their discussions or as an influence at all. So, some people believe there is a little bit higher bar to move in September, but, if that's what the data says is the right time, that they would go ahead and move.
I'm going to bring in what Joe Weisenthal was talking about in his column today, saying that yesterday the headline was Powell says that labor is not a source of inflationary pressures now. And his point was like, well, that's kind of the game, right? Like if the Fed no longer sees the risks of that wage price spiral and that inflation spiral from the labor market, which is what the Fed can control, if the Fed looks at it that way, that could set them up for a cut. What do you think about that?
That's certainly true. I agree with Joe. Joe's a smart guy. Over the last 3 years, Powell has basically said it's all about inflation. We have one-sided risk. We want to return to price stability. The labor market is fine. Now he's saying there are two-sided risks. There's risk on inflation. There's risk on the labor market, and that does set up a rate cut. I mean, because they don't want to see the labor market soften further.
Steve, to make a rate change, either up or down, does it have to be unanimous, or what does the Fed like to do typically?
It doesn't have to be unanimous. Powell has kept things unanimous for the last couple of years. But I think, particularly in the political environment, he would much prefer that there be a unanimous vote. But there are a couple of hawks on the committee, so that may be tough to get. I mean, you probably will get a dissent.
What do you think we're going to get tomorrow with inflation? Like, what do you think the Fed, Jay Powell yesterday definitely talked about how it's still going to be inflation ex services, that core number, right? What do you think we're going to learn?
I mean, all the estimates are that the CPI is going to come in relatively low. And the Fed, you have to remember, is focused on PCE inflation. CPI goes into it. PPI, which comes out a little bit later, will also go into that. And after PPI, sometimes CPI can be misleading. After PPI, you'll get some estimates of what their preferred measure of inflation is for the month. And but the estimates are things are coming down. Housing prices are coming down, and they know rents have been coming down, and that's delayed in the official data.
Steve, the Fed had a knock certainly that they were too late to raise rates here, and that they really missed the boat there. Does that influence kind of their thinking today, or are they just kind of slough that off?
It does influence their thinking in the respect that, they don't want to see a recurrence of inflation. And if they're going to err on one side or the other, right, they want to err on the side of not seeing a recurrence. They're afraid that if inflation were to spark up again, that would be really problematic for inflation expectations.
All right, Steve, thanks so much. We really appreciate it. Steve Matthews, Federal Reserve Reporter for Bloomberg News.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.